Hey guys, welcome to another episode of Best Bitcoin Data Show. We run this show with Plancy and Sminston with, and we try to bring you best of Bitcoin data every week. So I'm really excited for today's discussion. We have a long list of content. We're going to talk price action. We're going to talk price modeling and valuation, whether Bitcoin is undervalued, overvalued, and by how much. We're going to look at some of the latest updates by Plancy and Sminston on their work, price channels and such. And we're also going to look at some interesting analysis of MicroStrategy, which has been on a tear lately. So with that, let's take a look at the big elephant in the room, the price of Bitcoin. It's been pumping really, really hard. What was the highest we hit, guys? I think it was
just shy of 68, I think, right?
68. So let's
Just shy of
see.
68,
Very close.
We also got some Larry Fink kind of news. You saw it. You posted something about that. It was like an audio recording from one of his meetings or something like this. I didn't. It's kind of like some bullish perspective from Larry Fink.
Absolutely. We can talk about that as well. So yeah, first of all, price action, guys. It's awesome to see Bitcoin jump so high. It's a little bit of catches me by surprise. I'm doing this as slow DCA, and every time it goes up, I'm like, wow, I just need it to be lower for longer. But it's kind of a bittersweet feeling. What do you guys think about the price action?
Yeah, well, I definitely think like when you're a true like long-term Bitcoiner, it's exactly what you're talking about. It's kind of like if the price goes down, you're happy. If the price goes up, you're happy. I mean, either way, you're kind of happy. But no, I mean, I'm not surprised. Like we've been going sideways, like we talked about last week, or I guess that was on Saturday. We talked about how we've been in this basically 8 months of consolidation. Between 50 and 70K, and spending most of the time between 50 and 60. Between 60 and 70. And, we did have that like brief dip for a few hours below 60,000 a couple of days ago. And I was kind of trolling people on X saying like, oh, for a couple hours there, I thought the price was going to go to zero. I was worried just because it's like the dramatic shift in sentiment when we went below 60,000, right? But once we got above it, I mean, we're just kind of we're just hanging around 63. And then we had this nice move up to almost 68. And so it looks like, short term, it's like, I'm definitely no TA guy. So like short term, I have no clue what's going to happen. I'd have to have a model that I'm looking at. We can figure out models that we can use on the shorter time frames. But yeah, I mean, it's just, I don't know what you guys think. I'm interested in your perspective, but from my perspective, I mean, it's kind of expected at this point. Like we're kind of hitting a level where the next few months here we should start to creep up, and so I wouldn't be surprised. Like at any point, Bitcoin can break out, right? And there's just so much bullish news, right? There's a lot of macro uncertainty in the world, and there's a lot of things to be concerned about, in the global kind of overall environment of the world, of course, but specifically with Bitcoin, I mean, there's just so much bullish news, with the MicroStrategy stuff, and there's just so many things. So, but yeah, what do you guys think?
Yeah, I'm similarly being deep in as a long-term holder, an analyst who's a self-described, I guess, power law bro, which I say a little bit tongue-in-cheek because obviously we look at it a lot more than just the power law. But I think when you have that perspective, just like I'm sure you guys do, you're able to zoom out at times like this. And even though we've had half the year has been sideways, slightly decreasing chop. If you look at the bigger view, a lot of the ETFs probably had something to do with this beginning of the year uptrend, and now we're coming a little bit. It's a slight correction with that, but it's that slight correction I think is starting to meet up with this expected uptrend, beginning of this uptrend with the liquidity injection, the election coming up. It's kind of like this next cycle. We're just coming up on the heels of it. So that's kind of the way I see it. So I'm with you, Sina. I like to see this thing stay low. I like it to stay low and boring for as long as possible. Gives us lots of time to do fancy analysis. And when the fireworks go off, then it makes the excitement all the more worth it. So
Exactly. Yeah. And we've been talking about fair value going up no matter what. As time goes on, with the model we've described so far, Bitcoin doesn't stop, even though the price might, chop for a while, might be in a range or even go down. The value of the network grows every single day because more and more people learn about it. Adoption grows, more technological advances are made. So if you actually look at a fair value model, it's constantly going up. So you actually you have nothing to worry about when the price stops, and it simply does the firework at some point whenever it wants. And I also noticed it was very interesting that the pump happened like at a very specific moment. Was it early Monday? Like if you look at the chart here, like as in the beginning of the day, suddenly this jump happened. It really appeared like somebody big decided to join the market. And then, of course, this will liquidate all the shorts as well. And it gets a lot of other people will join after this. But it was very interesting. It definitely felt like a huge buy order came in on Monday.
That looks like what is that? That's almost a $2,000 1 hour candle, right? Looks like it. I mean, maybe 1,800 move in like a 1 hour window there. So that's a decent sized candle. So yeah, I think what you're saying, Sina, is makes a lot of sense. I think, hard to know, right, with the derivatives and things, people getting liquidated, but yeah, probably some big players could have came in there.
Yeah, and it's a good point. Actually, I hadn't thought about it, but our discussion last week, or I guess a few days ago, on all the fair value stuff, I think that this latest pump kind of put us right on the nose, pretty much fair value. So
yeah, it was around 67, right? The fair value,
right around 67. That's right.
The median, yeah.
Yep.
They're basically just hanging around fair value.
So that's a critical point, right? Because even with everything that happened, we simply caught up with what the models that we introduced last few sessions was predicting as a fair value or like an expected value in this time. So all we have done so far is just catch up with what the price should have been. And it's not even begun to even feel like a bubble type price action.
Exactly. And now, given what we said earlier in the conversation, would we all still be happy, or would we possibly expect the possibility of another significant drawdown to allow us to buy at a lower price? It could still happen, but all these events seem to be very short term.
Yeah, I don't know what you guys think at this point. Like, I mean, like the thing is, of course, we can't predict black swans, right? So like, but if there isn't a black swan that occurs between now and next year, if we don't get a black swan of any kind, I just don't see how we go back down to power law support. I think that it's kind of, we're not going to go back down to power law support at this point unless we get a black swan. That's kind of my framework on it. If we get a black swan, yeah, we could absolutely go down to power law support. I mean, that's between around 35 and 40, right? So that's highly possible in a black swan event. But without that, I just don't see how it happens. Like we've been going sideways for 8 months, and now we're starting to kind of creep up more. So what would cause us to all of a sudden break down and go down to 35K? I just don't see it, right? So unless something really bad happens, I think power law support is not going to be. We're not going to go back to that until potentially until like the next bear market, right?
Remember, in the past few cycles, there was this 30% rule that when bull market begins, most of Bitcoin dips would be in the range of 10 to 30%. And when we dropped by 30%, people were like, "That's the end of it." But it was expected that during the bull market, we see a lot of significant 30% drops. This time we haven't had any of it. It's just.
It's a good point, Sina. Yeah,
dips are very shallow. The buy power is extremely strong.
It is different. It's a very good point, because in the 2017, if people go back and look at the 2017 cycle, that cycle, there was, I think, 7 times or maybe even 8 times where we had like exactly like you're speaking to, a 25 to 30% dip. So like as we were, because it was a massive bull rally. I mean, that 2017 cycle was quite the rally off from the very bottom of the bear market. And I guess 2015 it would have been, or something like that. Though that 2 years of rallying, that there was like constant corrections of 25, 30%, because it would go parabolic and then it would kind of collapse down 30%, and it would go parabolic. And like so many times where people could have thought, okay, this is over, we're done. This is, because like, how do you know, right? Back then, like there wasn't really any models or anything, and you didn't have as much data to actually create models with. So it was just like, okay, who knows when this thing's going to end, right? And but now, like you said, it's very different. We're not correcting. I guess the biggest correction, I mean, we did peak at 73,000, right? So we did, I guess we did drop down to 49, I think. So we have had a decent correction, but that correction has happened over like an eight-month window, right? It's not like it was like a quick correction and then rally again. So it is different. Like exactly what you said. It does seem to be like a different pattern playing out with these corrections. They're more shallow, shorter lived. Things are getting bought up quicker.
And to your point, we need a much stronger shakeout. It must be something that feels very scary. And I don't think like things like even China banning it again for the 200th time would matter at all anymore. We need a significant fear event that will take us back down to anything close to that.
It almost feels like it has to be something outside of crypto. Like I just don't see what could be within the crypto ecosystem. I just don't see what could even take us down. Like what could be a black swan to be sufficient enough, directly related to Bitcoin? I mean, I just don't know. I mean, I do think it would have to be an outside event outside of Bitcoin and kind of crypto ecosystem, because we already flushed out all these like companies, right? Like we ended last cycle pretty violently with all these, companies going bankrupt. I guess there's always the possibility of some absurd thing with Coinbase. There's always these kind of people talk about these sorts of things, but in reality, there's just not much that could really take us down there at this point.
Yeah. As somebody who's going to be completing kind of on their first cycler here, it is kind of hard to imagine what it must have been like back in 2016, 2017, with those huge volatility spikes, without really having any kind of a very well known quantitative guide to kind of like keep you confident throughout the storms. That much has just been really crazy. And so now that we're in this phase, and Sina's model captures this reducing volatility over time, right? A question I had for Sina, and maybe we don't know the answer to this, but is the advent of the ETFs, like IBIT, you kind of track these cumulative inflows. Is that in part for this cycle in particular one of the things that are helping drive this kind of like continued diminishing of the volatility, do you think?
Yeah, I think for sure. I see it like in two ways. One is that just advent of the ETFs brought in just a ton of new money. New money causes the market to grow. It causes the market to be deeper. It brings in a lot more capital and liquidity. When markets are liquid, just crazy up or down moves that typically happen because of low liquidity, they just diminish. And then emotional swings get less important. And what would really matter is the fundamentals. So that's one thing. But also on top of that, just because we have so many dip buyers through the ETFs, like the whole Wall Street investors have the ability to buy Bitcoin without even getting out of their Fidelity account. They don't have to figure out, open a new app elsewhere or a new account, send ID, all of that. That might be fine, easy for us, but money is very sticky and people are lazy, and all of us are lazy, right? So money just stays where it is. And a lot of people love to be able to buy Bitcoin through the same account that they already have, not to have to create a new one. So this ETFs caused, I don't have the number, but I would venture to say, add millions of new traders to the Bitcoin space, traders and investors. So whenever price goes down, it's much easier to bring in a ton of new capital, and it actually works both ways, which is also fine. When it goes up, people rebalance. When it goes down, people rebalance and buy. So that will reduce the volatility even more.
Yeah, that makes total sense to me. It's you've reduced you've reduced a significant barrier to entry, or what has been in the past. So people are able to very seamlessly sort of react to the markets in a more lazy way, either way, more conventional way, as you described. That's a good way to put it.
Speaking of ETFs, it's also important that to mention that ETFs essentially they're good for adoption temporarily, but they're not the real Bitcoin. So we always recommend self custody. Bitcoin that somebody else is holding is only going to give you price exposure, and it's prone to seizure, prone to all sorts of rules, prone to all the, if I can call it that way, black swan events that happen to gold. So self custody actually is more important now, because a lot of people might get too comfortable with the ETFs, but you always have to consider that risk. You are not using Bitcoin the right way if you're in an ETF. Perhaps for some time it's fine, but for Bitcoin to really reach its potential, it has to be used like cash, just transaction money. Now at 21st Capital, that's one of our focus points as well. We help people set up self-custody schemes. And I want to just spend 1 minute on making an announcement. It's a very exciting announcement. We are introducing a new paradigm for self-custody, because we realize many people do not do self-custody due to the fear of making a mistake. It's actually, even for me, the biggest concern is I myself messing it up or forgetting something. And getting hacked is the second concern. So, we did some analysis. We did some research. We interviewed a bunch of people, and the resounding conclusion from there is most people are worried about the complexity of these setups and making mistakes. So we think we have a solution, and I'm just gonna tell you a little bit about it. But you can, but we still haven't launched anything. You can get on a wait list to learn about it. But I'll be very quick. I'll just give you one taste of the general idea without really spending too much time here. This is what we think about self-custody. On the left, you have the conventional multi-sig. You have a bunch of keys, and even if you're using a multi-sig, which is vastly better than single sig, but now you're adding complexity. You have to manage several keys. But more importantly, because it's much more complex, you have to know what you're doing if you're setting up a multi-sig. Most Bitcoins are lost because somebody made a mistake, not because they got hacked. So the fear of making a mistake, which, by the way, in Bitcoin means one mistake means all your money is gone. That's preventing a lot of people from self-custody. And people do have a logic that say, I just can't figure this out myself. It's too risky. All my money can be lost. So I'm just going to trust the good old government and ETFs and so on to keep my money. But what we're introducing is adding layered security architecture, meaning you have a basic setup in layer 1 with primary keys. It can be single sig, it can be multi-sig, whatever you like and you're comfortable with, but it will have backups. And all these backups are totally trustless, baked on chain. So, and they get automatically activated only when you lose your primary key. So you create a multi-sig, it's theft proof. If somebody steals one piece of your secrets, they can't do anything with it. But managing 3 different keys can be a little bit risky. If you're worried about mistakes and losing it all, we can bake in a second layer of recovery keys. So whenever you lose the first keys, misplace, or God forbid, in the event of death, or if you're in an accident, you lose your memory, you don't remember where they are, there's always a backup. that gets activated. And there's no limit to number of these layers. So your backup can have their own backup, and some of these backups can be owned by your heirs that get access to your money after a certain period of time. So I'm not going to explain more about this on our show, but just if you're interested, we are running a waitlist. If you go to our website, 21stcapital.com, you will the only thing you'll see is this form, okay, which allows you to sign up and join the waitlist. We are launching this new custody paradigm in a few weeks. Okay, so that's all I'll say, and we can get back to our analytics content. What do you guys think of this?
Yeah, I was gonna say, so, like unfortunately there's people, there's so much Bitcoin that's been lost, and these sorts of solutions are absolutely necessary. Like, given the amount of money some people have, in self custody, and to have these sort of backups and things. I mean, there's people who have lost hundreds of millions of dollars, right? It's like individuals. Like, I'm talking about individual people have obviously lost crazy amounts of money, and so. Yeah, there's a lot of people that wish they would have had something like this years ago. But yeah, I think it's great. I think it's great that you're pushing pushing forward the evolution of the custody, right? I think it's a much needed. So these are much needed solutions. So I'm all for it. And these are things like, yeah, I'd like to learn more about for myself personally, actually. So yeah, I think it's great.
Yeah, I know. Certainly, me and some family members who are very trusted, and I don't know about you guys, but I think in our personal lives, it seems that there tends to be like a limited number of sort of trusted trusted persons who you kind of even discuss what your OPSEC plans are, obviously, because that's why you're doing OPSEC, right? To protect your self-custody. And I've always been interested in multi-sig since I became aware of it, but I have not made that transition yet. So anything that can make that easier, more intuitive, sign me up. And so, like, 21st Capital here will be the first place that I'll be paying attention here and get on this wait list. So thanks so much, Sina.
Sure. And once you join the waitlist, we're going to send you some of our analysis and reports. And again, we're working hard to launch this. What we're doing right now is prepare educational material that can go with a formal launch. So let's take a quick look at the comments. We pumping, boys. Are we pumping again?
Let's
we pumping, boys.
Are we pumping? I have checked the price here. Oh yeah, it's actually going back to 67. Yeah, it's pumping a bit. I mean, it's yeah, we're kind of desensitized. I mean, we were going sideways for so long that even a small move is.
Talk to me when we break 70.
Yeah, that's the thing. Like, until we kind of, for me, like, yeah, 70K will be kind of something significant, right? And then obviously if we break the all-time high, that's significant. But the real big one for me will be when we break through 80,000. I think we'll be off to the races after that for sure. But yeah, I don't think we'll
after 80,000 off to the races. But then, because everybody else is also going to sense that we're going to explode, you will get a significant explosion after that. But a lot of it is also hot money. So I think after 80 or 90K, that's the only time I'm expecting a significant crash afterwards.
Do you expect us to go, like, because I think we'll have a pretty big pump once we break through 80,000. Like, I could see us just like go really quickly to something like 85 or 90. But I do think there are people that are going to take profits, there are some people that are going to definitely, they've targeted between 90 and 100,000 to sell. Like, they're not sell maybe everything, but there's some people that's like a sell zone for them, I'm sure. People that don't think we're going to go as high this cycle, that some people think we're only going to go like 120,000 or something. So some people might start to ladder out like around 90,000, right? They're really conservative people. And then some, got to factor in, some people have been in Bitcoin for a very, very long time, and they got it at such a low cost basis. And they've just targeted 100,000 as their sell point. It's like a very round number. It's like people love these psychological levels. So it'll be interesting to see, right? But obviously 100,000 will bring a ton of media attention. So that's also going to help bring in more people because, Bitcoin's going to be everywhere when it breaks 100K. Like, that's going to be a big event. And that's probably going to happen early next year. And so that's going to bring a crazy amount of headlines and news coverage, and that's going to bring in a lot more retail and just people being like, "Wow, I thought Bitcoin was dead. I thought Bitcoin. I thought it was like a scam. I thought all the stuff that happened last cycle." So it'll be fascinating to see kind of how that'll all play out. But so do you guys think that we're going to see like a pretty big kind of like a move, like we'll probably have a pretty fast move from 80 to 90 something, and then we'll probably have a decent correction, you think, before we go through 100? Is that kind of how you see it playing out? Like we'll need to consolidate below 100,000 for a while, or do you think we'll just blow right through it? That's kind of an interesting thing.
No, I think there would be a ton of people that are ready to sell at around 100. So maybe we go through it, but then we come back, maybe we try again, then lots of sales again. So it's going to be kind of a difficult thing to pass. But again, it's just going to be, in my opinion, going to be quite a bit of volatility around that level, but it will ultimately break until all the potential sellers are gone.
Yeah, absolutely.
Yeah. There are certainly, if you would have asked me many, many months ago, I thought there would have been a good chance to even hit 100K by now, which is, looking back and knowing what we know now, is kind of funny. But I agree. I think we'll probably take some price movement where we scratch 100K and we find some other support level below that for a while. It'll be kind of like a staircase kind of action for a while, would be my prediction. But 100K is both, like you've been saying for a long time, Clancy. 100K is a huge psychological level. That's 6 figures, right? I mean, that's that's the American dream.
I'm kind of torn on it, right? Because I mean, because we gotta remember, we're not necessarily looking at this through the lens of retail, like because you have retail's perspective, so you can look at it through a retail lens. Like it's hard for retail, I think, psychologically. Like it's a there's unit bias, right? So just to click a button when you see that many zeros, like it just, people, as much as people say, oh, it doesn't matter, you can buy a fraction of a Bitcoin, you still see the price is $100,000, right? That's the price. So for retail, I think it'll have some psychological impact, but how much is retail really moving the market compared to all these other big players? And like, are they affected by unit bias? I don't really think so, because they're just not, they're looking at their models, they're just allocating a certain amount of capital. They don't necessarily, so for me, I think it depends on who you're talking about. Yeah, it might affect like certain type of retail psychologically, but there's also going to be so much media attention and hype and excitement and announcements and just euphoria that I think people will just buy. I mean, people and the big players, like I said, the people that are really moving the market, larger retail holders and institutions, like I don't think they'll care too much.
And it's going to be crazy because Bitcoin is going to be at 100,000, but then there would be all sorts of these meme coins and ship coins that are at a fraction of a dollar. That would be like a crazy juxtaposition, and unit bias is still going to keep them going. But I did want to move on to Plan C's comment. I have it actually up. Maybe this is a great segue to that, because it's your recent iteration of the probability channel, right?
Yeah, I mean, this is essentially the same thing we went through last week. It's just it's been kind of I made it a bit nicer. So basically, I coded this in Python, and so it automatically updates every 10 minutes, which is really nice through the Glassnode API. So the really cool thing about this is, it's laid out in a very simple way, and I did kind of adjust it to make it a little more intuitive. And then what I did is I decided, instead of having individual bands, what I decided to do was kind of create sections. So basically it's 73 to 99.9 quantile, and yeah, maybe there's some new people this week. So basically the way these work is, for say 99.9, that means only 0.1% of the data points are above that top part of the red band there. So that's the most extreme, right? That is 1 in every 1,000 days we spend above that. Now this is 10-minute data, so you'd say, just 0.1% of the data points are above that. So it's very rare we ever go above that. But then I went down to the 97. So that's basically the top 3% of the data set. So the top 3% of the most extreme kind of bullish parts of all the cycles are basically what makes up those data points. Like it's the peaks of the cycles, the top 3% of the data set. And so that's the red band there. And then underneath that, it looks like it's the same, but because this is a log on the y-axis, it's not. It's between 90 and 97. So the 3% of the red is 3%, and the orange is 7%. But when you combine them, it's basically the top 10% of the data set. So when you're in those top two bands there, you're basically saying, you can say that once we get there, you want to be paying attention, because 90% of the days we've been below that point. So you're in the most euphoric part of the cycle, right? By definition, you know that there's 90% of the time you're not this kind of euphoric. So you kind of know that, okay, I should be paying attention here. This is somewhat of a rare error, so to speak. And for the red, we have, and these change they change every 10 minutes, but basically they're going to keep updating. And so over time, these numbers will go up over time. And we're going to have it so that we're going to, what I want to have is a rolling forward 1 year window. So basically, as new data comes in, we always kind of have like a 1 year we're looking out and seeing kind of what the prices are into the future 1 year, kind of like a prediction. But then we're also looking at what it is today. So this is just today. So as of today, it's saying that top red band, that top 3%, is 188,000 to 189,000, I guess, to 244. Now that is going to go up, and there is still some concern that we've talked about that these could be over predicting, basically a little bit on the high side. So we still have to kind of model that, but we would expect us to most likely at least get to that orange band. Now I don't know if we're going to get to the red. I'm not convinced we'll get to the red at this point, but I am pretty confident we'll get into the orange band. And so that's 144 right now to 189. And then on the bottom, we have the power loss support, we like to call it, which is the blue band, and that's 0.1 to 5. And so that's the bottom 5%, right? Those are the 5% of the days where we're the most oversold, you could say, right? That's the most panic, the most fear in the market. Those are the most extreme to the downside. And that's between 34 and 41. And so that's what we were talking about earlier. We were saying, okay, if we get like a severe black swan event, could we go back down to the power loss support? Now that's what happened during COVID, right? That was the COVID event. That's when we had the black swan there, because we actually did reach it during the bear market. So, we got there during the FTX collapse, the Luna and the FTX collapse. We went right into the same place as the COVID. So if you look at it, right, people would say, well, you could actually say COVID and FTX and Luna collapse were equally oversold events when you look at it from this perspective, right? From this lens, we got to the same place on this quantile, right? In the same place of the data set. Essentially, they're equivalent, right? And so yeah, right now at 67,000. So this automatically updates where, depending on what the price is, it'll actually tell us where we are as far as what quantile we're in. And so we're basically at 49.3. So we're literally right in the middle, like we talked about, right? We're just basically at the fair value. And so 67,000 was when I pulled this chart up. And this is using 10-minute data. So this is using like 750,000 data points from the very beginning of Bitcoin, from the full data set. And yeah, we're basically right in the middle, 50% of the, roughly, 50% below, 50% above. We're kind of at fair value, hanging out, and that's pretty much the model. So we'll keep updating this, every week probably, and we'll make sure that the biggest thing about this model, I like it. The biggest question mark is, are we getting it to that red band, or is that red band over predicting? Are we actually only getting it to the orange? That's kind of the main question for me.
Yeah. Also, just notice the red band might end up being just a momentary spike. It may not, like, for example, look at this one. It was just a spike. I don't know how many days it lasted.
Well, it might not see that. This could be literally hours, because this is 10-minute data. So those wicks up on the up and the down side, those could literally just be a few hours of data points, because it's 10-minute data. So it's like, it's not even necessarily a day. Some of those events were, I think they were a day most of the time, but yeah, they're very, very short-lived, right?
So even if we reach there, there's a decent chance that most people wouldn't be able to react to it at all, right? So it's much better to like not have a certain number at which I'm gonna make whatever decision I want, rather have a probabilistic view. That's why this whole probability channel is very important. Like the higher it goes, the quantile goes higher, and the higher the quantile, the more risk existing in the market. So you uh, instead of waiting to reach a certain level here or here, which might, the difference between these two might be just a few hours of price action, right? Instead of that, you got to be like vigilant all the way up and adjusting your risk metrics as you go higher. If you're, for example, if you were just a basic DCA guy, that's fine. But if you want to adopt a more active DCA, you might even call it the smart DCA. Some people try to slow down their purchasing as we go up step by step, not all at once, but as we pass each of these steps, you buy less, or even if you need money, you sell a little bit. But selling Bitcoin is nothing I can ever condone or recommend. But it's you knowing that you're likely not getting that money back. You can rebalance if you need money for something else. I myself, if I would sell Bitcoin only to buy something else that I extremely need, and value. I'm not going to say I'll sacrifice my livelihood right now just to accumulate more wealth. So I'll spend, but that's how I think about it, like step by step, according to the existing risk in the market, not all at once, not like counting on a specific number to realize.
I agree, and just would add that a chart like this is great because it gives you the optionality. There are those who would think that, I'm joking here, but thinking the unthinkable of strategizing some of their partial sell-offs towards the top. I think APSK had a great post where he had kind of laid out a vertical strategy there in 2025. But this is great because even just for tapering DCA, or kind of like if you want to have some strategy to lighten up the DCA as you get closer to the top, I think this is a great framework to give you that option, and to show you truly how rare it is for the price data to sit around the very tippy tops here. And in some cases, it looks like the wick ups are potentially hours. Some of them look like they're multiple days or maybe potentially even weeks, but I think every cycle is a little bit different, so it's hard to tell. So I think it gives every person in their own situation that optionality, which I really like, for their own risk profile.
Yeah, I think it just gives you a general framework of like where are we in the data set, right? Like right now we're in the middle, like we're at 50, we're at 49, basically at 50, and we can kind of track that over time. And we have multiple models. We're not just relying on one model, of course. We're gonna have a bunch of models here looking at it through different lenses. But just to be able to say like, oh, we're at 70 now, we're at 80, right? Like there's no guarantee we're gonna go up to 99 or 99.9. We don't know that that's how high we're going to get. Just because we've gone there in the past doesn't mean we're going to get there this cycle.
Yes,
but I'd be very surprised if we don't get above, say, like 80 or 90, because if we don't get to like the kind of the higher 10 or 20% of the data set, to me that doesn't really fit the definition of like an unsustainable peak. So we'll have to see. Like if we don't get to like say 90 plus or 80 plus at the very least, then we could just extend into 2026 and just go sideways. Like we could just kind of hover between 50 and 70 or 50 and 80, and so I would expect at some point we do get to 90 or higher. But we're just going to kind of track over time and see where we're at. But it's a good kind of snapshot of, okay, here's where we're at. And you can also kind of know your downside risk to a point. Like there's no guarantee, of course, that power loss support is going to hold, although out of everything in this model, personally speaking, I'm the most confident that bottom blue band is solid, because we've already had multiple black swans where that held. So I'm very confident in that. If that breaks severely, then the power law is basically broken and we got to go back to the drawing board. But that's something that we're all kind of, I don't want to speak for you guys too much, but I'm very confident that blue band. So that gives you kind of a downside risk potential, so to speak, right? You could say, okay, yeah, right now we're up at 100,000. Where's the power loss support? Okay, it's at 60K. Okay, we got like a 40%. I could go down 40K, right? So it gives you kind of an idea of the downside risk as well.
Yeah, and I think one thing, and of course, I know us three are really have got ourselves involved with the quantile approach and the probabilities, and I think the field of sort of probability and knowing what to do with probabilities or even what they mean, it's a very deep and broad sort of topic, and I know Sina knows this as well. And so I'm excited to get to a point where, like, the first thing I think about here is like, oh, the data spends a very small amount of time in this band. But then the next thing that comes to mind, and it's related to the question you asked, Plan C, which is, okay, well, what's the likelihood for this cycle that we're going to get into that range? Like, what's that probability? And I think that that's something that we're getting closer to as we sort of like adapt these models that perhaps will give us a more reliable prediction. Although I think it's hard to say exactly how reliable that's going to be. This cycle is going to be the true test of that, I think. So,
yeah, we still have to flush out, like the last thing I'll mention is we still have to do a bit more analysis on this model and see how stable the different quantiles are. I believe the bottom one is very stable, but maybe potentially the higher ones, we have to kind of see how stable they are, right? How much they move over time. So,
like, what is that likelihood? That the top of this bubble that we may be running up on soon is going to make its way into that red band? I think that's a really interesting question. The other thing I notice here is that it doesn't necessarily take a black swan, it looks like, actually, to get down into your fifth quantile kind of band. If you look at once the air was let out of the bubble after the 2021 peak, I don't know if you guys want to consider that a black swan, but that's spent more time in that band actually than what we did during the actual black swan, which is kind of interesting. That second.
Sorry, which one? Which one are you talking about?
They're in just going into 2023, end of 2022, right? So that second circle that Sina drew to the right, there's two circles there. Yep, that one.
Oh, you mean before? Yeah, we got pretty close to it. I mean, but that was you're talking about the.
Yeah, we're sitting right in it, right? The blue band.
But that's the FTX collapse, though, I think.
FTX and Luna, yeah.
So that was kind of a black swan.
Okay, yeah, if you want to, that's true. That's a good point.
The Luna was kind of leading up to it. So the Luna kind of brought us down towards the blue band. So we had kind of two black swans, I would say. Like the Luna was a black swan, and then we
had the next. So that last sag down might not have happened were it not for those collapses. Yeah.
See, this one, this is where 20K was broken, and a lot of people's dreams went with it because people thought 20K is the lowest place we're gonna go, and we went down to 16K, and actually this was where we hit the lower band. And if you had a model like this, you would have known that we are almost there. But
yeah, because we could have seen something if we didn't have the extreme like FTX collapse and Luna collapse, black swans. We could have seen something similar to the previous bear market. See how we just came short of the blue band? We kind of were just short of it, right? Do you see what I'm talking about? 2019. If you go straight up 2019, yeah. So we could have seen something similar to that potentially, where we just kind of went short of the blue band if we didn't get the full on, black swans, but. It brought us right in. I mean, in the previous bear market, looks like we went in the blue band as well. So,
I mean, to have our fair model value that we're relying upon now around that time would have just been amazing. So it's great to have this perspective looking back now for future, because who knows what's right around the corner. And we have these notions that we're going to kind of start to ride up this bubble coming up soon, but we don't know how much more air is going to be let out of this bubble, this little ETF thing. So
I mean, it just at least we can be less. I think the thing about, for me anyways, by having these models is you don't get caught up in the day-to-day drama and the day-to-day narratives. You can always zoom out and say, okay, look, where are we at? You can kind of be more rational, which is always good when you're an investor or a trader. You can say, okay, where are we actually on this kind of framework? So it doesn't.
It's kind of like a macro model of Bitcoin, right? It just gives you the broad picture where we are overall, but day to day, week to week, month to month, all sorts of things happen. But what this tells us is, first of all, from a macro view, we are right at the fair value number. So nothing has, you're not late. We're not in a bubble or something, and there's significant upside. But where exactly we end up, here or here or here, that's kind of up for debate. But this is the range we are looking at.
What do you think, though, guys? Like, do you think that, would you be surprised if we didn't get above like the 80 or 90th quantile? Would that surprise you? Like, if we ultimately had a peak and it wasn't above 80 or 90?
Let's see. What's in the 80 range here? So that would be like, if that's 9, okay, so 90 starts around 144.
Well, it's 144 today, but it's going to probably be more
right.
like 170, I guess, probably towards. Yeah, probably be. I guess it'll be probably like 170 towards the second half of next year.
Might just kind of with the totality of everything and all of our models, and I think for next year, I would be very surprised if we didn't go like my absolute lowest. It would be kind of like 180, I think. I don't know exactly what quantile that would end up being. We have to look at your forward-looking 1 year, but I'd be surprised if we didn't get.
Well, if your kind of worst case is 180, I think that would definitely get us into you're very close to the 90 or
getting up there.
Definitely above 80. We'd definitely be above the 80th quantile then, closer to.
So I guess yes, I would be surprised if we were like below that. So,
but I'm just gonna track the median. Anything above the median, I know we're just going to come back to it at some point.
True.
But yeah, so as long as the median is operating as it should, and Bitcoin adoption is going up, anything above it is sort of like debt. You're going to pay that debt back. Right? So
yeah, it's a good way to look. That's a great way to look at it. Actually, I really like that, because you're essentially saying, yeah, anytime you go past fair value, you're in a way, you're pulling value forward into the present from the future. It's almost like taking a loan in a lot of ways. You're loaning value for the future. So
they're years ahead,
and you could be called at any point on that loan. You got to pay it back. So that's when you have to go back to fair value. So yeah, it's interesting, and we're going to factor in other things like liquidity, because the liquidity cycle is going to play a huge role here. So we're going to we can say, okay, how high can we go? Well, a lot of that could depend on the liquidity cycle and how much liquidity is coming in. So we can model that. We can look at derivatives and other things. So we'll kind of get a sense of how much gasoline we have for the fire for the cycle. But yeah, I should let you guys go to some other models here.
So yeah, we've been going for 48 minutes, 2,400 people watching across all the channels we are streaming on. Again, thank you guys for joining us. It's just amazing to be able to talk to 2,500 people. So we do have a lot more. If you guys noticed, this was our first analytics chart. So
yeah, we should probably get going.
Maybe we can just cover some of them.
Yeah, we'll go way faster through these other ones. Sorry, guys, we spent a bit too much on that one.
All right, so let's go to the next. What is this one?
Yeah, so this is a new concept, and this is one that I've been talking about it with both of you actually. But this is the first version. This is very rudimentary. We're going to improve this in a lot of ways, statistically speaking. But I just wanted to introduce the concept more than anything. So this whole idea, it's not super complex. It's actually somewhat related to TA. But what it is it's the rate of change of the price. So it's just taking the price over the last year, and it's saying from the price today to the price a year ago, how much has the price changed? And then you take every single day, you do that, and then you do a z-score. So that's a statistical, Sita could probably, either of you guys could explain that, but you basically take the rate of change. So you're looking at, it's more looking at how fast the price is changing. And so I called it the parabolic price indicator, because you can see that it kind of gives an indication on when we have these unsustainable rallies of these parabolic run-ups, right? And every single time we've peaked, we've ended up on this, on the right side there, you can see there's there's the numbers in the blue line, and we have the different numbers there. So we've always peaked between 9 and 12. It doesn't mean we're going to do it this time, but the last 4 times we've peaked, we've gone between 9 and 12. So the 17 one, we got up to 12. Looks like in the last cycle, we got up just above 9. And then in the 2 peaks we had in 2013, those ones got probably around 10 or 10 and a bit. So yeah, it's just an interesting indicator. We're going to improve upon it, but it essentially gives you an indication of the rate of change of the price. And right now we're at 2.3. So we're nowhere near what we've been. Obviously, the sideways price action helps a lot because it cools things off, right? It also talks. It's kind of also to do with sustainability, because when the price is going up rapidly over a short period of time, it's less sustainable, right? But anytime you kind of cool off and you have these periods where you're consolidating for a period of a month or 2 or longer, it actually brings this metric down, right? So yeah, it's an interesting one. I don't know what you guys have any thoughts on, or how you would explain it.
Yeah, I think it's a very interesting analysis. Go ahead, Smith.
Oh yeah, it is. It's interesting. It's clearly pretty good at catching the peaks. Again, I think it's interesting that when I see metrics like this, Plan C, that like some of the ones that we've developed, they catch not the absolute peak of the 2021 cycle. I always find that fascinating, but it catches the largest deviation. Even though this isn't I don't think this is based on the power law, right?
This is just price. This is just a strict price and statistical. Just taking price and basically using statistics. That's all it is.
Right, and I guess that makes sense when you know what the calculation is, because the next mini, or not the mini peak, but the November peak there would be smaller because it's not that large relative to the first peak. But yeah, I think this is great.
Yeah, it's a speed of increase of the price essentially. Yeah, do you have any thoughts on it, Sina? We can always jump to the
No, I think this makes a lot of sense because adoption doesn't suddenly accelerate significantly beyond the natural trend. So we have this, in my mind, we have this slow growth. That's the real one. Perhaps that's the one that's helping the bottom to go up. Anytime price is kind of accelerating far beyond it, that's telling me that we are kind of getting ahead of ourselves, and it's just the speed of price growth, even though that's actually exactly what attracts a lot of people. But rapid price increase, it doesn't seem like it's a natural adoption effect. It's mostly some emotional reaction to some event, some news, or maybe prior price action. So this makes a lot of sense.
Another way to look at it is it's like you could call it also like a FOMO metric, right? It's like it's telling you the amount of FOMO in the market. So the higher the metric, the more we've had this kind of FOMOing in, chasing the price as it goes up higher. So yeah, unsustainable basically is the.
But we never come back to the same level after a significant bubble forming. We crash, but we crash at a higher level, right? Because during that bubble formation and explosion, adoption was still happening. So the bottom goes up, but you come back down to the bottom again later on.
Exactly.
Have you posted this one yet, Plan C?
I posted this a couple years ago.
Okay.
But I haven't posted it in a long time. But I haven't seen anyone else post this. This is a metric I just kind of came up with randomly one day, and people were like, "Oh, this is the same as you stole the MVRV Z-score," and it's like, no, this has nothing to do with the MVRV Z-score. It may look similar, and I used a Z-score, but it's not the same. MVRV is an on-chain metric. This is strictly using rate of change of price, so it's totally different. It's actually better than MVRV. MVRV downtrends. This one does downtrend maybe, but it's more stable across the tops than the MVRV. It's actually a better metric than
it's a pretty mild downtrend. Yeah.
It's just MVRV has a pretty severe downtrend. Sina actually has a version he posted where he's adjusting for that with volatility, adjusting it to actually fix the MVRV and make it more useful. And that's a metric we can share in maybe another week. But this is actually, in my opinion, better than the basic MVRV metric that a lot of people like to post.
Yeah. Okay, so let's move on now to Sminson's work. A beautiful chart. He just created it, I think, yesterday, if I'm not wrong. And this is the first time we are seeing the updated look. So what are we looking at? What is this?
Yeah, so this is updated last night. So it's been on my to-do list to just update the visual of this, which I've been doing 1 or 2 updates of this. I've been trying to, at least every week, along with that zoomed out video that people might be familiar with. So this is just the 2024 zoomed in look for the price. And this is the normalized percentiles of the price living within the decay channel. So if people remember my decay channel, I probably should have given you an image of that. But it looks like kind of like Plan C's channel that he was showing, but it incorporates the exponential decay of the top bound. Sorry, I didn't send that over to you. But what this is for last night's price, I guess. So this is like 66. No, this is actually updated as of this morning. So this is about roughly 66,000 BTC. That's what that green kind of flashing dot is right there. And then I have this kind of wedge that flashes up what today's different prices would be from the 0th percentile all the way up to the 100th percentile. So the 100th percentile would be the very top of that channel. And you can see that price, the $41,259 at 0%. That looks very close to kind of what Plan C was sharing for his support. So that's why that does look familiar, because that is the support value. So if we break below that, that's what we're calling sort of a black swan event. So we're still pretty cool according to my model here. We're in the light green territory. We haven't even really gotten up close to the 50th percentile range. Now, this is different. I want to call out that this is different than a quantile regression approach, right? So the only thing I'm using quantile regression for is that support, that 0 percentile. The 100th percentile is based on fitting the deviations from the support, and specifically fitting the 4 maximum residuals of the deviation, the residuals from the support line. That forms an exponential decay. And so when you multiply those 2 functions together, you get that top bound. So today the top bound is 143,874. So if we were to if we threw a bunch of fairy dust on BTC today and it spiked all the way to the top, the theory here is that we would hit that as the ceiling.
Can you explain it just for people that are less technical, just how you created this model? So just like very basic, just basically you took the top peaks.
So support is just exactly, I think, what you did, Plan C. For the support line, it's just the power law 5th percentile regression. So that'll give you, in log space, it'll give you a straight line that looks like it's literally supporting all of the price data, right? And then the next step is you take the residuals, or you could call it the deviations from that support line. So whenever the Bitcoin is going through its bubble phases, those are significant deviations. I'm taking the very highest point from each of the cycles, each of the past 4 cycles. So that value, if you fit an exponential decay line to those, it's a very, very precise and high accuracy fit. Yeah, he's kind of giving a good, I really should have given you the drawing for this. So if you fit those together, then you have an exponential decay, and then you're forming there's not a good technical way to explain this, I guess, without a chart. But it looks a lot like Plan C's channel, except it's starting to, as you go further out into the future, the top of the channel starts to diminish.
Trend down. Yeah,
trend down,
like decay.
And it starts to converge it starts to asymptotically converge into the support line deep into the future, like in the 2040s, 2050s kind of thing. So
you have you have a quantile model for this bottom line.
Well, he's using the 5th quantile, so it's the same as the one. So I'm using it's basically the same as the top of the one I was showing on mine, right? Because I use the 0.1 to 5. So if you look at that blue band on mine, his 0%, like the 0% on his, is exactly the same as the top of the blue band for mine.
Right.
It's the same thing.
And then you're looking at the deviation from the support and kind of normalize it by some another model that adjusts for the how high in previous cycles we went.
Yeah.
And also taking into account that cycle after cycle, the maximum is a little bit more subdued.
Totally. Yeah. And I'm also, this might be a way easier way to explain it so people can actually see it. So Sina, I just sent you the Decay channel itself. It's from back in July, but it'll get the idea across, and I can just speak to it really quick. It'll make more sense.
Yeah, because we hosted a few spaces together on this specific, like when you discovered kind of like this Decay channel, we created it, and it's just amazing the fit. Like for me, the big takeaway with this channel is, first of all, your visuals on that are awesome. Like it's just a great visual way to see things, but it's just so impressive how the fit, even though it's 4 data points, like it's such a good fit, and that's the fascinating thing to me is like, is this going to hold for a 5th time? And that's really the big question.
And we don't know. And I'm very open. I want to make it clear. I'm super open-minded about whether that, goes through the predictive value of this cycle or not.
It's either gonna get to it. Like it's either, I kind of see 2 scenarios with this Decay model. Either we keep stopping at the Decay model, or we break through it. I don't think we're going to come up short of the Decay. Like yeah, maybe a little bit short, because like I think if you look at the previous your oscillator, right? There's a couple times we were just shy of it, and a couple times we went just over it, but we've never been like way short of it, right?
But the strange thing is that you've seen, and I've shown this in I didn't want to get too far in the weeds on this, but we've talked about in the past, even in those wick ups for the very tops of each of those cycles, you get down to the hourly data, and the fit is still extremely good. There we go. Okay, so this is the Decay channel. So a lot of the other, like if you look at BitBo, there's 2 straight lines that go deep out into the 2040s. The top of the channel here, that is by definition in my oscillator the 100% value. Okay, so maybe that's the best way to explain it. So today we're in October, we're in October 2024. So there's more price data, obviously, but that top bound, see how it kind of slopes down gradually, and deep into the future starts to converge very closely to the support line. That support line is the same 5th percentile model that Plan C's is using, for example. So I'm modeling that top bound into the future by fitting. You see how closely, you can just see the price data, how closely they fit each of those tops. So closely, in fact, that the furthest deviation from one of between the model and one of those top points is only like a couple $1,000s. And so that'll be interesting to see this top if we're still within a few $1,000s of where this model says it's going to be. So the oscillator is formed by normalizing the distance between the support and the top there. That's all it is. So 0% is the support, 100% is the top of that. So over time, both of those values change, and the oscillator accounts for that, and it gives you a percentile. And that tells you how relatively heated you are. That's kind of the idea.
And right now, what are we at right now? We're around,
it's about 23.7, 24%.
Yep, here.
Yep, right there. And that peaked a little bit higher. You can see it, and then we dropped down today. I think this was saying it was 65,599. So it even dipped a little below 66,000.
Can you explain what those numbers mean? Because those numbers, that's not saying that's going to be the peak. Can you explain what?
Right. Yeah. So I added this. This is hopefully helpful, but maybe I need to explain a little bit. So I added an annotated dollar value for each of these percentiles. So 0%, 10%, 20%, 30%, all the way up to 100%. So you remember 100% is the top of the channel today. Today, not in the future, but today. So if we sprinkled fairy dust on BTC, spiked to the maximum possible price today, the theory tells us we'd hit $143,000. And if we drop down to that 5th percentile support, we would ideally hit that support line of $41,000. So this is telling us that 67,000 is about 24% in this channel. Yeah.
The top of
the
your
total
channel
range. 24% of the total range from bottom to top.
So it's between 140 and 40.
Right.
something like that.
There you go. There you
right?
go.
So these are like the top and bottom of the existing channel, not next year's values.
Correct. So your range there is about 100K, right?
Yeah.
So that's where you get sort of the 24%.
Perfect.
Yep.
Okay. So we are past 1 hour, guys. What should we do? What else are we going to? Maybe just let's go 5 more minutes. We just passed 3,000 viewers as well. So let's see.
Thanks to everybody sticking around. Do you guys want to get into the MicroStrategy controversy? We can just even it's up to you guys. We can go
maybe mention it quickly, just the gist of it, and then next time we can look at it deeper. How about that?
We'll touch on it quickly. I don't think it's it's not normally my focus. It's perhaps was an ill-conceived plan to jump into some of this MicroStrategy controversy price. But basically, I threw out the notion that there's a bubble of sorts that's formed and that we're currently living in. If you're a MicroStrategy holder, and that's okay. So, and this is my first sort of getting into this messy, controversial sort of topic that's not directly BTC quant analysis, but this is just an exponential relationship. There's the equation and there's the R squared between. It's the relationship between the MicroStrategy price and BTC price. That's all it is. That's all this is. And surprisingly, you don't see that a lot out there. Typically, what you see is the NAV premium or multiplier versus BTC price. And there's actually probably a lot of people who know more about that than I do, but they're looking for that, I think, normal price premium, right, relative to the amount of BTC that MicroStrategy is holding, for example. So they're kind of getting a sense of what kind of premium are you getting out of the company when you have MicroStrategy on Bitcoin, right? Like this is MicroStrategy on Bitcoin. So I just did a little more of a simpler approach, I guess you could say. Really, it's just price versus price. And I started this analysis from the first day that Saylor started to acquire Bitcoin onto MicroStrategy's books. So that's August 2020, I believe, all the way up to today. And so I gave the time dimension there just through color mapping. So you can see all the latest price data has pushed us up into this higher realm. But the exponential fit's actually not bad. It's not the best fit in the world, but it's the best fit that we have. I tried a power law as well. It's closer to 0.8. So, and there's a post on that somewhere. So right now it's a relatively, now the thing about this is it's non-linear, right? So in the lower Bitcoin prices, the change in MicroStrategy price is like $20 for every $1,000 or something like that. As you go up into higher Bitcoin prices, which is where we think we're going generally, if you're a Bitcoin investor, then the multiple on MicroStrategy's price goes up significantly, ends up becoming into the hundreds and then thousands of dollars per thousand. And so this is and I think this is where there's some controversy on the philosophy of it. I tend to think that when you have short-term exponential action like this in any financial asset data, you're looking at some bubble behavior. And I don't think it's a bad thing. It was more throwing it out there so folks are aware. I do hope that, and Clancy had a great context to add to this. There's a strategy, right, and sort of an arbitration process going on here that I think Saylor is driving, which is great. I just think for MicroStrategy investors, it's something to be aware of, that this in some ways goes back to what you were saying, Sina, right? Like you're in debt when you're in bubble phases, you're in debt. So things are overpriced. Just know that it's overpriced. The higher you go up this curve, the higher your risk is. That was kind of a big takeaway. And if you go to just the next chart really quick, just to tie a bow on this. Oh, I forgot about this one. You could probably skip this one, come back to it. Then this is yours. Did you get there we go. So the BTC and MicroStrategy along this exponential trend, and this is just to point out a little bit of the absurdity of it, right? That this would potentially happen next year, is that BTC and MicroStrategy would be the same price at the value of $257,000 roughly. So some people think that Bitcoin is going to hit that next year. So it's sort of pointing out the absurdity of thinking that MicroStrategy is going to hit, well over a $2 or $3 trillion valuation within a year. I just don't think that is very realistic. On the long term, I think MicroStrategy has a great chance of reaching that sort of valuation. But so yeah, that was my my spicy post, my spicy quant post yesterday on the
Have you gotten any pushback or any hate?
Oh yeah, yeah, oh yeah, and I think I was expecting some of it, but I don't think any more than I already would have expected. So, and I actually appreciate that it's causing a little bit more discussion, even taking the insulting with the reasonable. So
I just think it's so funny how it used to be Bitcoin arguing with Ethereum holders, and now Ethereum holders are too busy dealing with Solana holders. They got their hands full, and so now Bitcoin. The only thing left for Bitcoin is to argue with MST holders, which
yeah, do we really need these factions of MicroStrategy, Bitcoin fighting against each other? Probably not.
It's pretty silly because I don't currently hold any MicroStrategy, but I'm absolutely cheering for MicroStrategy.
So I actually do. So that's why I think people need to read the post very carefully, and don't get me wrong on it.
I wish I held it. I definitely wish I had some, but I'm happy to be in Bitcoin because I'm absolutely cheering for MicroStrategy because people need to understand, like, the MicroStrategy is obviously amazing for Bitcoin, and the more that spread widens, okay, maybe the guys on X are going to become more obnoxious and braggadocious or whatever, but that doesn't matter to me. I want to see them. I want to see it do well because the bigger that spread, the more Bitcoin Michael Saylor can essentially buy. Like, the more Bitcoin he can buy, which is just going to help Bitcoin holders indirectly. So the wider the spread, basically Bitcoin holders benefit from the spread widening without having to hold MicroStrategy. That's actually a way to look at it, because the more MicroStrategy, or the more that spread is widened, the better value Michael Saylor can get when he goes and buys Bitcoin. And what that does is it actually helps on many levels, because what it does is it actually increases the Bitcoin per share of MicroStrategy, which when he posts like, okay, and what it does is it actually creates like this somewhat of a yield on MicroStrategy shares, which is pretty phenomenal when you think about it, because he's actually mining Bitcoin through his increasing the shares, Bitcoin per share. He's actually a Bitcoin miner, but his overhead costs is like nothing compared to the Bitcoin miners. So personally, I believe, not financial advice, I just hold Bitcoin currently, but I would buy MicroStrategy myself before I buy the miners as a long-term hold. Now, in a short term, if you're getting in when it's a
long-term hold to keep,
if you're getting in at a 3x multiple, you got, like, we want to have models where we're saying like, okay, where are we within the distribution? Are we buying at the high end of the distribution of the range of where the spread has been? Like, we can create models where we can say like, okay, what's the full history of the spread? The more data we have, the better over time. We can say, okay, where are we on that distribution? Are we in the top, again, percentile or quantile or whatever? Are we in the top 5%, 10%? Okay, probably not the best time to be buying. Or if you're buying here, no, you're taking on more risk. But absolutely, as a long-term hold, what he's doing with basically mining Bitcoin. But I mean, I think he had an announcement where he increased the Bitcoin per shares by like 17% in a year. So that's like a Bitcoin yield, So it's phenomenal.
You nailed it.
We could discuss in very in depth about this whole MicroStrategy thing, but the big takeaway for me is MicroStrategy and Bitcoin are absolute allies to each other, and the bigger that spread, the better it is for Bitcoin holders. MicroStrategy holders also benefit, of course. Obviously, the bigger the spread, the more incentive there is for Michael Saylor to sell MicroStrategy shares, dilute shareholders. But when he dilutes the shareholders, it's beneficial to the shareholders because now they have more Bitcoin per share. And it also creates news events, which causes more excitement and causes more people to go buy MicroStrategy. So it is like, it sounds like it's like a Ponzi scheme. Some people would say like, oh, this is like a Ponzi scheme. How is this possible? But it's actually, it's not. It's actually, when you align the incentives very well, MicroStrategy holders win, Bitcoin holders win. The only loser is USD. That's the only loser in this equation. It's a feedback loop where the incentives are aligned, and there's really not a loser besides the dollar. So he's taking advantage of something. So there's a lot of different opinions and perspectives, but that's kind of mine. And
fiat money is extremely cheap because it's created out of thin air, and distributed to various businesses, some of them producing real value, some are really zombie companies, and a lot of misallocation of capital is happening by that. Michael Saylor is just weaponizing that same thing against the US dollar. So he's accessing cheap money and converting into Bitcoin. By doing that, he's allowing this unlimited, ever expanding fiat world to flow into Bitcoin. So it's kind of like he's sitting at a junction doing this arbitrage between fiat and Bitcoin.
Yeah, I totally agree with you guys. I think it's a great and essential process. He knows he's doing right. So I think, yeah, my only argument there was that, and it kind of goes along with the narrative. Even Fred Krueger did some analysis in other capital firms. I think since 2021, the NAV premium has been 2 or lower for 94% of the time, I believe. And the average value is like 1.3. And I think right now we're like 2.4 to 2.6, something like that. I don't remember exactly as of yesterday.
I think we got up to 3. We got up to 3, and this is the
got
thing.
Up to 3. Yeah. Yep.
And it's not just that. Like I've been euphoric before. Like I've held altcoins in the past that have gone up a crazy amount. So I know what euphoria feels like and how people act when they're in a euphoric state. And you can absolutely tell that the MicroStrategy holders are in a euphoric state. The way they're acting,
yeah,
it's very, I can see it from a mile away because I was in a community where people were acting like that, and I was one of those people. So I've lived through this with altcoins that have done extremely well. So you can just see they're absolutely euphoric. And so, yeah, I mean, it doesn't mean MicroStrategy can't keep going up. It just means the risk becomes exponentially higher, that it's going to eventually come down to earth.
Exactly. It's like the percentiles in your model, Clancy. It's like what percentage of the time is it going to spend in that range, sort of thinking. So it's
very smart. But Michael Saylor is an absolute genius, because this announcement of this Bitcoin bank into the distant future was very well timed, because the spread was widening, and he nailed this announcement, because what he's trying to do is basically create the biggest spread possible so he can load up on Bitcoin right now, because he knows his window is closing. He knows he only has a few months left before the price of Bitcoin is going to start rallying this cycle. So he's trying to widen the spread through these announcements to create hype and excitement for the future, so he can buy more Bitcoin right now. That's really the goal.
Awesome.
Yep.
We actually did several episodes today, guys. This whole MicroStrategy was its own rabbit hole. Very cool, very cool. I loved it. Perhaps we should even allocate more time to MicroStrategy in the next few sessions, because it's gonna pump, I think, for some time. And if it keeps pumping, amazing. If it temporarily corrects itself, that will give us some more reasons to discuss it.
The best Bitcoin data, MicroStrategy and Bitcoin Show.
Yeah,
no, the best. Yeah.
Very cool. Is there anything else we want to mention? I'm also running late for another meeting, but if there's anything else we want to mention at the end, let's do it. But otherwise, we can call it a day.
Sounds good to me, gentlemen. Yeah, another great episode for the books. Thanks for everybody. Tons of people watching. Thanks everybody for joining us.
3,300 people. So thanks for watching, guys. Send us the comments. Send us your thoughts. Follow us. Follow Sminston, Plancy, and our Twitter channel, YouTube channel. We will try to stick to the schedule. So every week, the same time, with potential changes here and there if someone has a live event or something. But otherwise, next week we'll continue this, and we'll keep bringing new analyses to you, and tracking what's going on with Bitcoin and everything else around it.
Yeah, and Sundays we'll have some guests on, and like for anyone that is joining just this week, first time. Last week, or it was actually on Saturday, you can find it on our accounts. We had a guest on, Matthew, who did show some great charts. It was really good show. So for anyone that missed that one, it's worth going back and watching it. He showed some really good stuff. So But yeah, anyways, I'll let you guys go.
Yeah, and like Sina said, yeah, anybody, all the viewers giving us the feedback is hugely valuable. You know, it helps make the show more valuable to you when we know what you guys want to hear us talk about. So, yeah, thank you guys for the great show. Go ahead.
What's your motto? Like, it's best Bitcoin data, baby, or whatever it was. So we need a motto.
All right, there you go. We'll have to have like a contest, motto contest.
Yeah, we should. All right, guys. See you next week.
Thanks, guys.
Thanks guys. Have a good
week.
week. We'll see you next week.
Too.
Take care.
Bye-bye.